if you're asking me, do I think Bitcoin will get to $200,000 by the end of the year? What I've said is no. I think it will trade to new all-time highs by the end of the year. Institutions are looking at this more with like sort of a calm opportunity. And I think crypto retail sentiment is really down at the bottom. So I think we will cycle through this bearish market. And then I think the institutional demand and end of year window dressing will push Bitcoin back to new all-time highs. I think will be reimagined as a bull market again.
Today's episode is brought to you by Trustless Media, pioneering the first way to bid, win, and trade ad space as NFTs in your favorite creators. You can bid now to unlock ads just like this in Coinage or other premium creators like The Rollup or Thinking Crypto at a 90% discount. Head to auction.trustless.media to bid on ads today and even get paid if you get outbid. Welcome, everybody, into another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York City as we are continuing to try and make sense of the sell-off in crypto as Bitcoin tries to hold the line at 100K. Wasn't too far along that 100K would have been very comfy for a lot of investors in crypto. So excited to have on with us today the CIO over at Bitwise, Matt Hougan, back on Coinage. Matt, it's good to see you, man.
It's so good to be here. Thanks for having me again.
Yeah, I mean, it's interesting. I was thinking back, and just as I said, I was thinking back to the last time I think we had you on was when we were kind of in a shaky period as well and like hovering at like 95, and we're like, well, how low are we going to go? Weird to be on the other side, or at least trying to hold on the other side of 100K and thinking about the same questions here. So just first, just want to get your take of what you're making of the sell-off and how you think people are doing in navigating it right now.
Yeah, well, I think the answer to that depends on which people you're talking about. If you're talking about retail crypto Twitter, there's extreme levels of bearishness, extreme levels of even depression, I would say. If you're talking about institutional investors, there's relative excitement and no panic at all. They're looking at an asset that is up significantly on a one-year basis. I think Bitcoin's still up 30% over the last 12 months. They still see it in a bull market. They're still buying. So institutions are looking at this more with like sort of a calm opportunity. And I think crypto retail sentiment is really down at the bottom. My own view is that Bitcoin tripping along sideways here around 100K is a gift. I think it's an opportunity to stack sats. I think it's an opportunity to build positions. I think the long-term trajectory is up and to the right. It's just a matter of time until we get there.
Yeah, it's been interesting. I've been chatting with a few different fund managers now recently this week, and we just had Sean Farrell from Fundstrat on Monday kind of talking about why he's still bullish on Q4. I mean, I get the fears, and I'll just say I do kind of put myself more in the retail camp of just kind of feeling the bearishness and, you know, the timeline being down right now because it's just like, I don't know. It's interesting to kind of square the idea of this consolidation, and a lot of people are describing it that way, of whales selling, hands changing, institutions coming in. But like in terms of catalysts, are there ones that you're pointing to for Q4 that could potentially put in a floor here? Because I think that's the sense of scariness that people are facing now is, I don't know if all the DATs are looking shaky. What does this look like in terms of how low we could go?
Yeah, it's a great question. I think the thing that people are worried about, particularly on the retail side, is whether there are more bodies to surface from the big deleveraging washout and sort of the concerns around vaults and hacks that we've seen recently. I think either a major body surfacing so people can get that out of their system, or the passage of time, let's say 4 weeks with no major hacks or no major other issues, will help us sort of clear that out of the system. One reason I think crypto retail is on the sidelines is that they're not sure that process of figuring out what happened during that deleveraging process and whether there were major institutions that were harmed. I think that is continuing. So if we can resolve that one way or the other, I think that would be sort of the bottom of sentiment and the opportunity to rebuild. The other opportunities that I see for sort of positive catalysts is, I think, progress on the Clarity Act in Congress, or rising expectations that we're going to have progress on the Clarity Act, is a upside surprise that's coming to the market, and I think could give us a reason to rally. Similarly, I think if the market starts pricing in the probability of more rate cuts, if we sort of peel backwards from the hawkish tilt we heard from the Fed at the last press release, I think that could give a bid to a market. So whether it's rate cut expectations, Clarity Act, or just retail getting past their worries that we haven't seen all the downstream effects of that giant deleveraging we had, I think those are the things that would sort of signal the bottom and start to push us upwards until the end of the year.
Yeah, it's been interesting to think of kind of those catalysts that could be farther out when you're right, when there's a lot of concerns just around, hey, did someone blow up out there? And are we still witnessing some of that? Because I do think that is, I mean, you would know better than a lot of people maybe in terms of the institutional discussions. I've been having my own, and it's like everyone's kind of still looking over their shoulder to kind of figure this one out. But it was, I mean, like, we also talked to Mark Yusko on the show about like the idea of how much damage something like that does, not just to trust and like wanting to buy a bottom, but to, I guess, the idea of infrastructure in current day, not regulatory infrastructure, but just straight up the plumbing of what's going on right now and how locked up it is. I mean, do you get a sense that anything on those fronts have improved in terms of figuring that out?
I think the market is still digesting it. I mean, I do think that's one of the reasons why sentiment is still so bearish. I think the market is wondering how many people with leverage positions tied up in the market still have to unwind those positions. I think they're wondering if any major institution took it enough on the chin that they'll be severely challenged. I think the answer to those questions, for what it's worth, are there is still some unwinding and deleveraging that needs to happen, and some small hedge funds that probably are being wound up and need to be moved out of the market. I don't think there is a major institution that was severely enough damaged not to make it through, but there's certainly a risk of that. And I think people just, it's hard to know, even for someone in my seat, which has the benefit of having a lot of contact with these type of firms. It's hard to know if we've fully gotten to the bottom of that. And I think that uncertainty is what's contributing to maybe retail sitting on the sidelines and not buying this dip as aggressively they have previous dips.
Yeah. And I guess, I mean, maybe we shift over there on the institutional side too, because you have, and I think a lot of people were excited about BSOL's launch, because if there is one area that was holding up, it was fund flows for Solana. And kind of getting it out the door with staking included. It was a big kind of celebratory moment before we were worrying so much about liquidations. And you guys were down, I think it was the New York Stock Exchange, right? Celebrating that. So, I mean, obviously to do that, you had to put a lot of work into getting it in front of institutional investors and interested parties in scooping up BSOL. I mean, what does that process look like in terms of just, I guess, still seeing excited demand?
Yeah, we were really excited to bring BSOL to market as the first spot Solana ETF with 100% of assets staked, chasing after that full 7% plus yield. And as you mentioned, the response has been incredible. It's the fastest growing new ETF launch of 2025 across all ETFs. There's been 850 plus ETFs launched. It's the most in any year in history. And BSOL out there is number one by trading volume and going to get there to be number one by total inflows. And we see buying, each of the first 6 or 7 days. I think that will continue. What it means is there is institutional appetite for high quality crypto assets that's still pent up and needs to be released. I think it gives a very bullish signal on, there we go, such a great event at the New York Stock Exchange, a little bit of a Trojan horse event, bringing the future of how markets are traded to ring the bell at the place where they're currently traded. But it was wonderful to see the Solana community come out for BSOL. I think they were very excited. And look, I think that's going to get billions of dollars of flows. It's one of the most exciting crypto projects. Investors are under allocated to it from a traditional market side. And I think they're going to correct that in the next 6 to 12 months.
Yeah, I want to talk, but before we jumped on, we were talking about opportunities you see in the market here. And because I do think, some of the alts have just continued to get shellacked outside of the majors, and Solana's earned its way into that discussion right up there with ETH over what they've been able to do over the last few years. And perhaps not surprising to see BSOL come out of the gate so strong with all of that given. But with the idea of everything else now, looking at the other alts, I mean, what's your take on kind of the fear in those that, okay, that window might be closed now if this is kind of where we're at? Because it was supposed to be, and I know we haven't gotten Clarity Act yet, but it was supposed to be kind of the coming out moment of everything else.
Yeah, look, I think the expectation around an alt season should be one of differentiated returns. I think the era where alts all rose together and any alt was a good alt and the more risky, the better during bull market blowoffs is no longer the case. And I think you can see a little bit of this in the relative flows we're seeing between, let's say, the new Solana ETP and the new Litecoin ETP, right? People are differentiating on what they're more excited about. And I think that will be true going forward. We're going to see a lot more quote unquote altcoin ETPs. Some of them will do exceptionally well. And I think they'll be driven by strong community interest and strong fundamentals. And some of them I think will fall completely flat. I think we're just going to see a broader dispersion of returns in alternative assets as we move from the speculative phase of crypto to a more fundamentally driven phase of crypto, from the retail driven phase to the institutional phase. I think that means more distribution, more differentiation, and an era where fundamentals matter more than they did in the past.
Yeah, I feel like that's maybe one of the, maybe just to echo kind of the concerns on the retail side, is maybe a piece of that just being, hey, where exactly is some of this enthusiasm going to head? It's interesting to kind of see, I guess, Ripple and the fundraise discussions that are existing right now around kind of things that they have planned. A very big week. I know you're going to come out here for New York Blockchain Week. A very busy week out here. A lot of conferences being had. And then I guess when you pair that from a retail perspective, it's like, okay, there's a lot of money flowing in still and very little to show for price action. There's like this debate, I think, being had right now, and particularly maybe the event on the NYSE, as you say, it's kind of a Trojan horse moment, or potentially fearfully on the part of retail, a moment where is Wall Street maybe getting better at this than we are in terms of actually having any upside, or is it all just kind of going to the second order derivatives and the like? How do you kind of look at maybe that being a distinguishing factor of this cycle versus the ones that I know you and I were around for when the boom times felt like boom times?
Yeah. Look, I think this cycle will be different. I think it will be slower and grindier, but still a lot of significant upside. To make that comparison between sort of retail OG investors rotating out and institutions rotating in, you could give the example of like tech stock IPOs. Jordy Visser wrote a great piece about this. You could look at Facebook's IPO. Facebook IPO'd at $38 and then traded down for 15 months before it got back to $38. Today it's at 635. What does that tell you? It tells you once you work through this distribution phase where the early insiders sell to some of the institutions, there can be enormous amounts of upside for those that hold to the other side. So I would, my word to retail investors is like we're at inning like 3 of Bitcoin's growth. We're at inning 1 or 2 on ETH and Solana. We're in the pregame for some of the other more interesting alt assets. There is still a lot to go after this handoff. It's just going to be different than it was in the past. It's going to, I think, look more like a ladder and
Mm-hmm.
less like a trampoline. But that can be great for your portfolios as long as you have the right time horizon and as long as you have the right portfolio sizing. You can. There's still a lot to go. It's just maybe less volatile than it was in the past.
But I think that that's one of the things. I saw you speaking on the 4-year cycle, and definitely saw the piece around kind of the IPO thinking. And as someone who, in college scooped up, I can't remember exactly the price, but yeah, it was wild to see the enthusiasm for Facebook's IPO die almost instantaneously, and scooped it up, I think, at like $14. But that was a long time ago, and obviously it's an interesting thing to think about just because of historical expectations. I think, October being October and significantly not being October this time around, and the idea of potentially, okay, is Q4 actually going to be Q4 in the historical expectations or not? What is your explanation on the 4-year cycle? Is it just that, hey, look, maybe that's in the past and this is just a slow churn? Because it sounds like the answer would be yes.
Yeah, I think the 4-year cycle is dead. I think the reasons we had the 4-year cycle are just no longer as relevant, right? The halving is half as important as it was 4 years ago. Interest rates are going down. They went up in 2022. They went up in 2018. So they're working in a different orientation. Blow up risk is lower this time around than it was in 2022 with FTX in 2018. with ICOs in 2014 with Mt. Gox. So the reasons we historically had those resets on a quadrennial basis are just either inverse or no longer very relevant. At the same time, you have this institutional bid. If anything, I think we've already done the 4-year cycle. We've already hit the bottom or near the bottom of retail sentiment. We've maybe speed run through the bear market and we're ready for this new institutional phase. But more than anything, I just think we're in for a slower churn upwards. And as institutional demand progressively moves into the market, I think that is the dominant theme. And that's like its own 5 to 10 year cycle. And I think that's what we're going to be in. Of course, there's volatility. We're living through it now, right? We're off from 125K to 100K, but we're still at 100K.
And I will give you credit. I will give you credit on that too, because the last time we chatted, it was, I think, again, we were sitting at like 95, and you said, "Hey, this is still going to churn higher," and then we did. We hit the 125. And I guess you mentioned some of the macro pieces of this too, and interest rates moving in the direction they are. I think it's a bit idiosyncratic in terms of the liquidation event and kind of what's been happening with the market's reaction to Jay Powell. But certainly, the last time he stepped to the mic, odds of a December rate cut did go down. I think he made it pretty clear that he wanted that to happen in what he was saying. And as you look at those things from a macro perspective, Matt, like how do you look at maybe still explaining that story to investors of how Bitcoin has performed relatively well when we do move in that direction?
Yeah, well, I mean, look, I think the market has it wrong on future rates. That's a big thing to say for me because I think I trust in markets a great deal, but I think it's very short termism. I think the Trump administration wants lower rates. I think they've politicized the Fed. They want to install a new Fed chair that's going to be more dovish than Powell is. Maybe for December in the existing Fed, we've come down, but I suspect that this economy wants to run hot and we're going to get lower rates in the future. So for a risk asset like Bitcoin, which retains some risk asset characteristics, I think that's a positive catalyst that isn't reflected in the market. The administration wants lower rates. Lower rates we shall have, and I suspect that's the direction of travel.
Yeah, and it was also, I guess, somewhat of a, I guess it was a microcosm within that speech as we sold off, and then you heard Jay Powell talk about softness in the labor market, and we kind of came back. It was a bit of a bounce back, and it's an overhang now. I mean, it continues to be softness in the labor market, but the idea of AI is a double-edged sword, I almost feel like. And because you've got like the productivity of it all, of course, and you've got what some are still considering a bubble in terms of the data center side of things. And then you've got a weakening labor side of the economy. And so when you pair those pieces, it is strange. I don't know if you think that will continue to just be kind of status quo of, look, the Fed seeing softer labor market is going to mean more rate cuts. But at some point, does that start to concern you around like, all right, that usually is the trigger for maybe what could happen in 26, 27?
Yeah. Look, I think the Fed is worried about white collar job loss in this age of AI. And I think they actually probably want to front run it. They certainly had idiosyncratic views on the COVID layer, inflation being transitory, which they had to peel back, but they're trying to project forward to what will happen. They're not exactly backward data driven. I think there's a lot of projecting forward on future employment challenges, particularly for white collar jobs. And I think they're going to lower rates. I mean, I think that's another reason to lower rates, that they're going to read into the data and push us in that direction. So I just think the market will recalibrate backwards to where we were maybe a few months ago, expecting more rate cuts. I think that's the direction of travel, and I think that's going to be beneficial for Bitcoin.
To bring it back to, I guess, crypto as a whole right now, and just to press it a bit further in terms of where you would be safe to say we have bottomed, as we kind of like talked about framing this convo. A lot of people are wondering if that is the case. I don't know if there's an indicator that you're looking at that would say, all right, this is close enough for me to give the all clear, if not right now.
Yeah, I mean, we look at sentiment, which has entered extreme bearishness territory. That's probably the dominant factor here. We use qualitative sentiment around what we're hearing in the market. That's why I think there's the potential for another a little bit more softness, because the market hasn't fully accepted that we've moved past that deleveraging moment. But I think sentiment is a good place to look. Probably the best place to look as retail sentiment really gets to deep. There you go. It's already in pretty deep fear. Maybe
Yeah.
if it gets into that red category, that will mark the bottom. Maybe, a handful of influencers giving up on publicly on crypto Twitter. You always love to see
I'm
that as
almost in
well.
that camp, man. I'm almost in that camp. It's just like, okay,
Dude, fold it in so we can get higher. Come on, man. Let's make it happen. You could be the catalyst. You could be the
let me hang up
catalyst.
the cleats. Let me save everyone. I'll be the savior complex of I'm shutting it down. Now we built
There
this
you
studio.
go.
Can't shut it down now. But no, it's been interesting to kind of see that rotation because I don't know, there are jitters, and I think maybe just because you've been around for so long in the space, it's almost like a good reminder for people that usually those things don't die out of fear, right? I mean, like if you think about other cycles too, there's a lot of unforeseen liquidation events, which you could certainly put October 10th in that camp, I think. But we're still chugging along at 100K, like you said. So it's a very different thing.
Yeah, I think 100K, don't look past the simple fact that 100K is a big round number and people like to sell around big round numbers. I think once we get past the people wanting to sell around 100K, then we're going to see the market going up. Look, we're in a market right now where the market aggressively punishes bad news and ignores good news. And that's a classic bear market. Eventually, we'll get to the point where the market is sort of numb to bad news. You'll see bad news happen and the market will trade sideways. You'll see the market start to reward on the margin good pieces of news in crypto. That's the moment that the cycle has switched. And maybe we start to run away from this 100K number. Again, I want to emphasize that from my perspective, I've come to view this sideways chop as a gift and not a challenge because it is giving us the opportunity to build up positions. I think going forward, people's allocation to crypto will be larger than it is smaller. I don't think this is the death knell. I just think it's a phase shift in crypto, and ultimately it resolves to the upside.
Well, I also do think it is interesting just to think about, looking at the market cap and where we are now in this bifurcation of Bitcoin, ETH, Solana, and everything else in crypto, basically. And as you look at it in terms of kind of, where Bitwise is positioned, it is. Do you get the sense that it's like, all right, we're gonna things can still be fine with those majors, but then almost everything else is kind of in this weird wait and see camp of like, let's see what happens here, and if enthusiasm comes back plus clarity. Like, how do you look at maybe some of the enthusiasm if we do think about these things as IPOs, kind of like where the enthusiasm for everything post BSOL is?
Yeah, well, I think again, it's going to be very differentiated by project. It's going to focus on projects with high quality fundamentals and strong community. I also think that as you move past the majors, you get into an area where the market may be ripe for disruption. You look at some of the major DeFi primitives as an example. They were launched in a regulatory area where those tokens don't have that much of a direct tie to the value of the underlying protocol. I wouldn't be surprised to see a new wave of crypto assets emerge under the new Clarity Act, the new positive regulatory environment, this new blending of securities tokens and traditional tokens that are more attractive to investors. Maybe the rise of hyperliquid is an early stage example of that, but I wouldn't be surprised to see 2 or 3 more new assets emerge in 2026 reflective of this new environment and taking advantage of the new regulatory setting that bubble up into the top 20 or 30. So of the existing alternative assets, I think there's still a few more BSOL style winners. And I think we'll see that in ETP format. But I would
Yeah.
also look at new assets emerging that people get very excited about in 2026 and beyond.
Well, I do want to ask you about that too, because Bitwise has actually been, I think, ahead of the curve in that realm of kind of you do both well. It's like, hey, we need to make sure that this is happening over here with our major institutions and investors on that side, but then let's dabble in kind of what else is kind of on the cutting edge here. And I think to your point, we've been experimenting on our side as well. As Zora's taken off and creator coins within the base ecosystem has become a thing. I do think it is an interesting kind of asset class built around attention. We've been experimenting with our own kind of ways to plug that token into what we have on the existing kind of ownership side of actually having an entity or an entity that people can mint NFTs and become co-owners in our co-op. It does look very similar to kind of an attention DAT as we're calling it, but I mean, what are you seeing in terms of that? Because maybe it's just because I'm in my own bubble over here in creator coin land that we've seen it blow up on Zora, but is there anything that that you think that matters? Because like you guys had the NFT stuff way before NFTs came and went. You still do, as far as I understand it. Now we're kind
Yep.
of in this new chapter.
Yeah, the first a DeFi index fund, the first NFT index fund. I love what you're doing on the creator side of the economy. I think that will be an emergent market. I think a mistake many investors make is ideas that sort of bubbled up over the last 5 years but didn't reach escape velocity, assuming that they're DOA. I suspect just the timing wasn't quite right, and those will all be interesting and exciting. So I'm personally spending a lot of time thinking about the DeFi area. As I mentioned, I bet there's a new generation of assets that is very interesting in that space. I think there's still growth in prediction markets that is underweighted by the market and new applications there. I think what you're doing on the creator side of the economy is interesting. I wouldn't be surprised at all to see a DePIN renaissance with new tokenomics that are more favorable and more securities like under this new regulatory climate. Changes in regulation create entire new fields for entrepreneurs, and people who assume what we're the end of that and no new ideas can emerge. It's just all Bitcoin and layer ones. I think they're going to miss, like, if you're bored with Bitcoin because it's not offering the 1000x returns. I do think there will be those 1000x opportunities, but they'll be in these smaller sectors that are now overlooked by the market because maybe they didn't run in 2021.
Yeah.
But under new regulation and with new sort of fast throughput, low cost blockchains, I think they have the opportunity to really accelerate. So I'm thinking a lot about those areas and what are the most interesting to explore from a Bitwise perspective.
Yeah, I mean, for us, it was kind of the same thing. It was just very much that. It was an experimentation of, hey, Zora is doing things. They're included in the Base ecosystem. Jesse Pollock's pushing this through the Coinbase app, and like having a token, you used to have to go through hoops of getting listed everywhere, and now just the idea of Base and the Base app basically plugging in creator coins has unlocked liquidity for a bunch of different creators here, and like you said, a huge 100x or whatever it may be in terms of where we were before and now. I think it is an interesting time. But nonetheless, I want to kind of wrap up on this, Matt, too, because as much as we love what we're doing here, I don't want to be self-serving. So just to kind of wrap up, we've been, every time we have smart people like yourself on the show, we like holding their feet to the fire for some predictions. I know that I can't remember if you're in the camp that you've changed your year-end target for Bitcoin in terms of your crystal ball and where we get, but where do we go?
Yeah, so we don't revise our December 2024 predictions at Bitwise. That's just not something we do. We put our stake in the ground at the start of the year, before the start of the year, and then we see how it runs. We think that's the honest approach. If you're asking me, do I think Bitcoin will get to $200,000 by the end of the year? What I've said is no. I think it will trade to new all-time highs by the end of the year. So I think we will cycle through this bearish market, and then I think the institutional demand and end-of-year window dressing will push Bitcoin back to new all-time highs. I think we'll be reimagined as a bull market again before the end of the year. But it would take an extraordinary trade to get us all the way to 200,000. I think we'll end up shy of that. But I do think we're gonna bottom out from a sentiment perspective and accelerate into the end of the year. And I think new all-time highs in 2025 are still in store.
Well, I think it's a good place to wrap up there. And as I said, it's always helpful to have these chats with you, my friend, when we're in those periods of chop. And I appreciate you bringing some clarity to our viewers as well. CIO over at Bitwise, Matt Hougan. Thanks again, man.
Thanks for having me. This was fun.